Now it's focused on Brexit, with UK ministers on standby for a special cabinet meeting within days. UK Brexit Secretary Dominic Raab is expected to meet with his EU counterpart Michel Barnier to publish the full withdrawal agreement on Tuesday. But the Irish border remains a point of contention, with the EU pushing for the border in the Irish Sea in the case of a no deal. Expectations of a no deal are ramping up, with the Bank of America spending $400 million preparing for a hard Brexit. So how likely is a no deal scenario? And what would it mean for the markets? Mike Gallagher from Continuum Economics and Arend Kapteyn from UBS Investment Bank are both still with us. And then, of course, we had this data just a short while ago in terms of UK GDP. Britain actually posted its fastest economic expansion almost 2 years in the third quarter, but we had a sudden loss of momentum from August onwards, pointing to possible slower growth in the run-up to Brexit. So what's your pound call based on, Arend? Is it the economy or is it just Brexit?
So the pound call for the end of next year is entirely based on what's happening on Brexit. So we're counting on there to be some deal, which is going to give you a bit of a relief rally. And so we have 138 on dollar sterling, for instance, by the end of next year. I think the GDP numbers are interesting because the uncertainty effects that we've been estimating from this negotiation that's now lasted 2 years are running at about 1% of GDP per year. And so they're big. And so what was early in the year, as you know, there wasn't that much uncertainty, we saw GDP bounce back a little bit. The moment you get this negotiation heating up, you see some slowdown again in growth. So I think that's interesting. To be honest, no clue what's going to happen. I mean, it just doesn't look like the votes are there to vote for any kind of deal. So we'll see. The way we deal with that in the baseline, we just assume it away. We assume that somehow by March things will resolve themselves, but we honestly have no visibility on how that's going to happen.
Mike, how do you see it panning out? And again, if there's a constitutional crisis, right, because it doesn't get through Parliament, what happens to pound?
So we only attach a 10% probability to the UK leaving on March 29th, 2019 with no deal. It's actually more likely that the alternative scenario is that the Brexit date is actually delayed 3 or 6 months on agreement with the EU 27 under Article 50. The main scenario is that we actually sort of get a deal, and that deal does lead to a temporary bounce in the pound. The problem, though, for the UK economy is that we're so dependent on the consumer. The UK consumer is fatigued. The UK is very much a late cycle economy at this particular point in time. You're not going to get a trade deal done until the end of 2020, maybe even 2021. So the uncertainty will lift, but it's not going to completely clear. And so you're not going to see a bounce back in the UK economy on a withdrawal deal. If we do see a no deal, then that is really bad for the pound and for UK sort of equities. It would really sort of provide a dampener to investment appetite.